another question from one of our viewers. Any recommendation to avoid suffering during a downturn market?
Yeah, I mean, I think that, Charlie Munger says that, 3 times in the last few decades, Berkshire lost more than half its value. And it didn't bother them. It's, irrelevant. So I think that, there was a saying I grew up with is if wealth is lost, nothing is lost. If health is lost, something is lost. And if character is lost, everything is lost. So at the end of the day, I think the way one should look at the portfolio is understand what it's worth, not understand what the markets every second are pricing it at, because the two can diverge quite a bit. And if you don't have leverage in your life, you don't have margin loans, and some asset drops 50% or 70% in price, and you don't need to sell those assets to keep the lights on, it's irrelevant for the most part, because it is in the nature of auction-driven markets that you will have very wide variance between price and value. And we see that all the time. So for example, if I took all the stocks in the New York Stock Exchange, put them on a dartboard, small tickers, and I just throw darts, any stock I look at, the price range in a year would be 50 to 100 or 70 to 130. It's a wide range. If I look at the value of my home on Zillow, for example, every day for a year, it may not move more than 10%, 5%. The movement is very, very narrow, because one is an auction-driven market, and the other is a market where intelligent buyers are interacting with intelligent sellers. So auction-driven markets will always overshoot and undershoot. And it is that overshooting and undershooting that helps us make money. So I love auction-driven markets because it gives us those opportunities. But you also have to be willing to take the pain where you're holding something and it's dropped a lot in price. As long as the underlying asset is still valuable and worth a lot more, you don't have any leverage or anything else, you can just ride it out, no problem.